Welcome to Finance with Justus. I'm Justus. The earnings week goes on. 3M is next. 3M just released their Q3 numbers. You have to take these numbers with a grain of salt because they divested their food safety division. So they have a one-time gain on their balance sheet, which changes their EPS by a lot. So you need to modify that. If you want to get the correct net income, you need to take the current net income minus the divestiture, which leaves you at 1.1 billion this quarter. In the last year quarter, they had 1.4 billion. This puts them at the EPS of 1.99 versus 2.47 last time. That is a big drop in profitability for 3M. Their net sales also decreased year over year, and the organic growth, so the growth without any acquisitions, because 3M is a big acquisition company, they buy a lot of brands every year, have organic growth of around 2% over all divisions. That is nothing. Inflation is sitting at over 8%, and they're having organic growth of 2%. Revenue, not profit. Revenue. Of course, you gotta be fair, 3M is a global company. They're gonna have a 4.5 to 4% impact on their revenue this year due to the strong dollar. If you would factor in the 4%, you would come to 6%, which is an okay growth number for 3M. So this company is currently not growing at all, basically. This maybe shows some issues with 3M. 3M doesn't always have the cheapest products. They're a brand who are going for higher quality products. And if that is not going in this environment, then maybe this shows a weakness in 3M's business. They had 1.4 billion of free cash flow, of which 1 billion they returned to shareholders, which is great. A 1 billion return is a lot. My only issue is their free cash flow is dramatically decreased. They're increasing their capital expenditures a lot. Their capital expenditures up 27% year over year. They're saying it to invest in growth, but the problem is, where's the growth? An increase of 27% in capital expenditures. At 2% organic growth, 6% if you factor in the strong dollar. I am not happy with 3M increasing their capital expenditures by 27% and basically having no growth. So on an income perspective, the company is already not looking great in my opinion. Also not on a free cash flow perspective. Let's look at the balance sheet. They reduced net debt by around 3%, but nearly by the same amount that they got from the divestiture of the food safety division. This is probably also a one-time thing. They're not going to be able to pay down that much debt again. The only positive thing I see here is a 3% share reduction. Okay, I gotta say, this share buyback program was good. It's a good share buyback program. Just as the stock crashed, they bought back a lot of shares. So balance sheet, it's looking okay. It's not the worst, it's not the good. But there's still one important thing that you need to mention about 3M. The risk of lawsuits. They're being sued for their earplugs, which were apparently non-functional and gave hearing damage. And it's not clear how big the lawsuit will be. They're already paying out millions and millions and millions. This will cost multiple billions minimum. So if you think about it, you got a company which is not growing that much, needs to spend a lot to get this small growth, has an okay balance sheet, has a risk of lawsuits. The only good things about this company are the buybacks and the dividend yield in my opinion. 16.5 PE ratio. I get a slow grower who needs a lot of capital, has a weak brand at the moment, and a risk of lawsuits. I don't know about you, but for me this does not sound like a good deal. I can get Google for a slightly higher PE ratio, with a way higher growth rate, a way better balance sheet, and no risk of big lawsuits. This is just an example. I personally don't own Google, but it is a company that many people consider a great company, so I'm just gonna bring it out here. So if you think about it, would you rather want the poor business, 3M, or a good business like Google? I would say I would pick the good business. 3M at the moment is not a great business. If they turn it around, it's maybe worth to look at. So this is a turnaround candidate. Do you own 3M? It's very popular under retail dividend investors, so this might probably upset some of you. But what do you think about 3M? Put it down in the comments. Have a good day.